anything you can do now to prepare for that crash leaves you coming out on the other side with a lot more opportunity. And you could then end up being the buyer and on the receiving end of what many people are already predicting is going to be the largest transfer of wealth in history. It's already happening, folks. If you're not paying attention, you got to wake up. You got to open your eyes because it's happening all the way around us. Who would have thought that American home sales would be be hitting record sales in 2021? With all things said and done, with a global pandemic, I will be the first to admit that I didn't see this coming. And I sort of have to concede here that I was wrong with respect to how well things have performed, with the government's assistance.
Yeah, I think there's a lot of good data that we're going to obviously share today. I think a lot of that had to do with some pent up demand also, for months after really the pandemic came into play. I mean, people were not out looking at homes. People were not out showing homes. I mean, everyone had that kind of deep fear in them, and rightfully so in many instances. So I think the market really stalled out. And then I think over time, that demand ultimately ended up bursting. And what we saw at the end of last year and the beginning of this year, I think might be a product of that. We can talk about housing busts and housing booms all the time, and we can always try and relate them back to something that happened. Obviously, we're going to be looking back at 08 when we're doing a lot of this analysis, but no two of them are the same. So I really want to dive into some of that today. I think you've got some great data. I've got some great data, but I think that people ultimately sometimes make the assumption that every time something like this happens, the outcome is going to be the same, the origin of it is going to be the same. And just based on what I'm seeing and just hearing out there, I don't think that this would fall. There are a couple similarities, but I think that this is far different than the 08 crash. Your argument is the crash is coming. I've been predicting that since 2018 on this channel, and I've been wrong every time. I think I'm going to go at least 1 for 4, batting 250. There's people in the Hall of Fame, that hit a lot of home runs, but they also, had a reasonable batting average, and 250 has gotten some folks in there. So I'll take 1 for 4. I've certainly swung and missed the first 3 years, though.
And you think it's coming this year?
You know what? I don't necessarily know that I believe that. I think that there's some regulation in place right now that's going to prevent things that did happen back in 08 with Fannie and Freddie, for example. There's a really big shortage. So there's numbers out there right now that we're still 4 million homes short in the United States to meet that demand. So I think it's going to play out a little bit longer. This wouldn't be something that I would say would to be anticipated within the next 3 to 6 months, but I wouldn't be shocked if it happened, towards the end of the year or the first part of next, depending on a couple variables.
It's funny, in my first video about the real estate market being doomed, where I was expressing concerns about the forbearances, people being laid off, 30 plus million people unemployed at that point. It was the general consensus of anybody who disagreed with me and thought I was such a dumbass that it was due to inventory levels that we were going to avoid the crash, which it's obviously very difficult for me to argue with at this point. I mean, Redfin is apparently forecasting a 2.53 trillion total US home sales through 2021. That's up 17%, which would be the biggest gain since 2013. That I think is really pretty amazing, but I think a lot of it comes back down to that inventory, and obviously record low mortgage rates have been a key player in this pent up demand that you're talking about.
Yeah, and I think there's a couple of data points out there that, right now we are higher than we were in 06 and 07 as far as average home sale price. So, I think that there's an inflated sense right now. I think that I wouldn't call it panic buying or panic selling, but there's just a lot of information out there. Are people taking, inflation into play? Look at this number right here, the forbearances that you talked about and the, I think, looming foreclosures, which is going to be great for a real estate investment market. And I'd love to, kind of dive into that later here in the episode. But right now there's 8.4 billion to 52.6 billion in back rent owed. 5% of all home loans were delinquent, including loans in forbearance. And there's 9.8 million people remaining unemployed. So I think where we could fall into some issues is once supply does catch up with demand, I think that could be a real problem. I also think that people are going to be overbuying for what their budget could be right now. You know, home prices are going through the roof right now. Was their income keeping up with that? So everyone's in this kind of scramble mode to get the inventory because they know that there's a lot of scarcity with that. That's a very powerful sales tool, as we all know. I think that there's going to be a lot of folks that have overspent on their home because they fell in love with it for one reason or another. It was in the perfect school district, whatever the case may be, and they've gotten to bidding wars. And I think that a lot of people are going to ultimately outspend their means, and that can really crush a market fast.
I think that's the biggest downside of these unrealistically low interest rates. It's something that they're damned if they do, damned if they don't by way of raising the interest rates. They're basically trapped at maintaining these low rates because the moment they start to increase, obviously home sales shift, it becomes more of a buyer's market again. Interest rates at the time of this video being made were as low as 2.75% again. You don't think that that's enough to bail people out of their predicament by way of, say, refinancing out of the equity positions that a lot of these houses now have, allowing people to attack and maybe eliminate some of this pent-up non-mortgage related debts? Or are you concerned that because of underemployment or even unemployment, you have borrowers that are underqualified, and even if you have equity, the only out at that point is to sell? What are your thoughts about that?
Yeah, so, you know, I was thinking before we got on the phone here today and just, you know, thinking back to, you know, the last market crash, and a lot of us saw the movie The Big Short. Well, people were going out then and they were overspending on homes. They had, you know, this self-reported income. Now there's checks and balances in place right now for good reason that I think are going to prevent that. But I absolutely think that people are going to get in over their heads with that. That's kind of my come from with this. You know, these
interest rates are deceiving to an irresponsible consumer who, by way of home equity lines of credit and the ability to sort of roll your reckless spending into your perceived home value, which we know can fluctuate just as easily down as it's gone up, if not at a faster pace. Do you believe that we as consumers kind of talk ourselves into this permission slip to go out and actually buy crap we don't need, because by just putting it into the home, we now don't have credit card balances? We actually convince ourselves that we're managing our debts well, when in reality we're misspending, we're chewing up cash flow that could be used elsewhere into even better long-term investment opportunities. Tell me what I mean, again, I'm trying to get the sort of that silver bullet, nail in the coffin confidence that we are heading into this sort of looming housing collapse and correction, and when that might happen, if it's coming.
Yeah, I just don't think that the increasing values are sustainable right now. Now, interest, I think, is going to play a big role in that, but consumer mindset, as we know, can be very skewed. And you're going out and you're doing all the wrong things, but you think you're doing them for the right reasons, especially people that are buying, you know, homes, you know, for their family. So you can't always sit back and fault them, but most people aren't actually out there doing the research either. They're following the herd. And that's where a lot of people run into problems. You and I, we talk often on this show, you know, about following the data, reading the data, following the science, following the trends. And the people that are not out there doing that right now, and they're not maybe at least hedging, I think are going to be in a real problem. From an investor standpoint, I'm excited about it now, and I've shared this before, you know, I never want bad things to happen to good people, but inevitably they do. And someone is going to ultimately capitalize on those, and I plan on being one of them.
This goes back to a video I made last year after things were starting to become really nuts. That was just recommending, regardless of what happens, because there is such an unpredictability about it, that preparation is always arguably a smart decision. And I often liken it to just collecting firewood. I mean, if I were on the show Naked and Afraid, that's all I can ever think about is I would just be constantly gathering firewood. It seems like all these people kind of wait until the storm is upon them and then frantically try to put together a fire. That would not be my recommendation here. Isn't it fair to say that the short-term net cash flow solutions that you can begin to create are truly the supplementation necessary in order to ride through or weather any storm, regarding your long-term investments. So whether the real estate market collapses shouldn't really matter, because it collapsed at the worst level it had in our lifetimes just 11, 12 short years ago. But if you'd held on long enough, you'd be sitting fine today. I just got done creating a video to talk about Bitcoin again, because people act so erratically when you talk about these large percentage swings up and down, and people panic sell because they see it coming down. And it is not a good day today for Bitcoin. And it hasn't been a good few days for Bitcoin, but to sell means that you took a loss. If you just held on to it from 2017 to 18, your Bitcoin would be worth a lot more. If you've just been able to hold on to your property, the problem is the cash flow squeeze, right? So can't we agree that whether it goes up or whether it eventually crashes shouldn't matter to how you go about your day-to-day?
If you're prepared the right way, and I really like your firewood analogy.
Because I think you're right. It smells just like 2008 to me. Mm-hmm. And I've personally just been catching whiffs of this scent. The cracks are beginning to show by way of debt. I think debt is one of the biggest ways of testing the strength behind any economic situation. And from the consumer standpoint, we're sitting at record highs in all the categories that you don't want to have too much debt within. So my fear is people will drown themselves as a result of over leveraging.
Yeah, I definitely agree with that. I like your point about, if you've got that, positive cash flow each month, and you're not relying on most people's biggest asset, obviously being their home. If you're not relying on necessarily having that equity or sucking the juice out, or, whatever you want to call it, you don't get burnt if you don't sell, right? So the people that are positioning themselves right now to have those multiple streams of income and can ride out a, 2, 3, 4 year wave, because they don't, if their equity fluctuates just based on home values, that it really is insignificant to them. It's the people that are over leveraged, the people that need to get the juice out of their home, and then all of a sudden they went from a $100,000 equity position down to a $20,000 equity position in the home, within days or weeks, whatever the case may be. That can shatter a lot of dreams, right?
Yeah, it's true. And I know that just by looking through some research, more people are searching now at whether or not there's going to be another crash. People are looking on Google for when is the housing market going to crash. Those searches are up by 2,450%. There's this gal, right? Her name is Suzanne Mistretta, and she's the director over at Fitch Ratings. She said that slowing employment recovery and still high unemployment levels are not supportive of long-term substantial price growth. That supports everything you just said, right? I mean, Fitch estimates that national home prices are approximately 5.5% overvalued, and that there are some places that are 10% overvalued. And they're calculating that US home prices in a quarter of the country's metropolitan areas, statistical areas, are really more than 10% overvalued at the moment. That means a correction could easily be around the corner. If we're not focusing on net cash flow, we could end up in a pinch. This is where I try to differentiate long-term net worth investments, which, by the way, I would disagree with your analysis that a home is somebody's biggest asset. They might confuse it with one, but if it's not paying you, generally speaking, it's an even trade unless you're downsizing or relocating. Most people don't like to downsize or relocate. Maybe that happens later in life and it all pays off in the end. But as you're progressing and you're maturing in life, most of the time you're wanting to upsize, get into nicer places, and you're wanting to stick around, the people and things you know and love the most. So I think it's pretty interesting to think that we could see these values dip. And I guess the question should be, how much do you care? I personally don't care. Just like I don't care that Bitcoin, my profits for the year have more than dropped by 55% at this point in the last 4 or 5 days. I've lost $100,000 in 4 or 5 days. And I've, since 2017, come a long way. I know that now psychologically because I'm not frantic. I'm not freaking out about it. And it's because I know that it will be turning around at some point, and real estate will work the same way too, right? So we know that this is all about being ready to weather the storm. Is that a fair conclusion we can draw regardless of which side you stand on this?
No, I absolutely do. It's always about preparation. You know, another stat that I saw, there was a 12% gain in new home construction last year. What that ultimately is going to do, in my opinion, is as soon as inventory catches up with demand, there's going to be a dropout. I mean, there's going to be a bottom that's going to drop out of that as soon as those are kind of on level playing field. So let's say we get to that 4 million additional homes right now that, you know, they're talking about is going to be necessary. I mean, look at lumber prices right now. That just goes to show you what new home construction is doing. It's driving up the price of every single one of those materials. Not only is it making obviously the home more expensive to buy, but it's starting to catch up with that demand. And as soon as those are on equal playing field, I think that that's going to lead to it as well. That's going to be detrimental to the housing market.
So what do you think is going to be the straw that breaks the camel's back here? Obviously, the inventory levels have sustained the market and has driven everything higher. What do you think it is that's going to cause that inventory level to rise? Is it being these forced sales because people are in so much desperate need for their perceived equity position? So enough sellers realize that, hey, this market is the right time to be a seller. Therefore, that decision happens to come in as sort of a flooded listing situation. And all of a sudden, now there's just more properties. And the second you start to see sellers dropping prices, it's a domino effect. And then they're out competing each other for the lowest price at that point.
100%. That's when there's kind of that blood in the streets mentality, and those people are absolutely hitting panic mode. I think inventory catching up with demand, I think, is going to be one thing. Depending on what goes on with unemployment, I think could be another.
It's funny because I know that the forbearance market right now, the forbearance numbers are 2 times higher than they were during the last market crash, right? Which means that there is this kicking the can down the road sort of situation that's been happening. Don't even get us started on this video about the labor crisis that is a direct result of the government coming in and subsidizing everybody's needs to the point where they don't even want to work. And I guess I'm just sort of wondering, when does it all come to a head, right? Because this is really what's keeping people in their homes and preventing the market from collapsing is the bailout. True?
100% it is. You know, the bailout, I think what they're about to do I've heard a 4th stimulus. You know, so, you know, just pumping all of this money into the economy, you know, I think ultimately is keeping people afloat, but it's not going to be a forever thing, nor will the forbearances will. Now, they've extended them multiple times, but at some point they're going to stop doing that. And then that's when people are going to be panic selling, obviously losing their house to foreclosures, which again, from an investor standpoint, you know, I'm positioning myself for that. But as a consumer or a homeowner that, you know, is going to find myself in that position because that's unavoidable for them, they need that, that's going to be a real issue. And I think that all of that happening at the same time, I mean, we've been on this video for just a handful of minutes at this point, and I think we've already identified, you know, a half dozen tea leaves right now that are ultimately taking us down this path. There's not an expert or there's not an economist out there right now that can look you straight in the face and say, this thing's happening in 3 months, you know, or this thing's happening in 6 months. But when you're seeing all of this mass movement of potentially negative outcomes all happening at the same time, they're not all going to miss. Right? So it's which ones are going to be the biggest, which ones may not happen. But when you've got, you know, 5, 6, 8, 10 different, you know, potential negatives that are all building up steam, there's just no way that it doesn't come to a head. And again, my humble opinion.
Well, I don't want this to be all FUD today, but we do have to be aware of worst case scenarios. And I think that there are even additional layers of risk that I haven't seen many people talk about at all, which is, for instance, the FHA loans, which even though there's this sort of steady argument from people who want to remain optimistic that this market can continue on well into the future because banks aren't quite as lenient as they were in the last housing crisis. We didn't see this sort of subprime predatory lending abuse taking place. But when you look at the high loan to value loans like FHA, the number of participants that took advantage of not just a low down payment, but in many cases, down payment assistance. We have many borrowers who really did get in right at the very top of what could be afforded for their household. They often are more credit challenged. And therefore, I think we do have a collection of buyers and borrowers who maybe will find themselves in over their head, especially with the employment market being so shook up over the last 12 to 15 months. I am still I'm somebody that will more readily admit that I do obviously have only my best guess like everybody else, when I was absolutely certain a year ago at this time that we were heading for severe danger. Maybe we do find a way to pull it out, because I do know that the banks, just like last time, had no interest in taking these properties back. It's in the bank's best interests to find a way out of a crisis. And so whether that be reworking loans, going through modifications, taking a forbearance and converting it into a deferment, where instead of asking for the last 12 months worth of delayed mortgage payments all at once, they actually tack it onto the back end of the loan. So it makes it more affordable. And again, then the next step going into a modification decision, maybe they rework loans again. They're not interested in becoming property owners. They don't want to foreclose. And the foreclosure process, even through Obama, was made much more difficult to go through, which will deter some homeowners from just maybe throwing their hands in the air and saying, I'm out of here, toss the keys in the mailbox and walk away like they did the last time.
Yeah, and I think the FHA mention that you had right there, I think is just spot on. Those are going to be the people that are going to be most at risk, because they, in many cases, probably shouldn't have gotten into that home in the first place. They're going to be in trouble, again, in my opinion, but I think you see it the same way.
I do. And I think that, combined with the potential of interest rates rising, if interest rates were to go up, I think that would cause a rapid rise in the market shift. I think we would see a really quick change. You would have far fewer borrowers qualified to come in and both buy, not to mention even refinance their way into a more affordable housing expense. So I think the low interest rates have really been what everybody's been hanging on to, combined with these bailouts and the money flowing into the system. But once we see all of these timelines expire, including the foreclosure, I believe that the foreclosure market is still, I think that got kicked down to 2022, did it not?
It did, yeah. It just had another extension on that. Yep. So I mean, at some point, the dam's got to give on those, the forbearances, the foreclosures. The Fed has come out and said that they're not going to have, skyrocketing interest rates in the near term, but ultimately I think that they're going to have to do that. I think that that's going to have to happen in order to keep up with inflation, which I'm really anticipating. We did a video on that recently, but with all of this money being dumped into the economy, someone is ultimately going to have to pay for it, right?
Exactly. I mean, we're just delaying the inevitable. So what can we do? Obviously, if anything happens positively or negatively, being prepared is ultimately your best bet. I don't see the downsides to preparation. Why could somebody come back to me and scrutinize the concept of going out and diversifying my income streams and making another $5,000 or $10,000 every month? That ultimately is going to serve me either way, right? And that was the point I was trying to make last year when suggesting the real estate market was in trouble. I got a lot of hate on that video, and all I was trying to say is, look, even if I'm wrong, having an extra $5,000 or $10,000 per month income stream is only going to help. Don't be afraid to get after this stuff earlier. Having an extra income stream is only going to help. So what I would recommend people do is find what that best income stream is for you. Here on this channel, we talk about a lot of them. The one that you and I have talked about a lot of times in the past is the Little Pink Houses of America business model. I personally think that's one of the best that people can find to get a leg up. I actually just interviewed this gal, and Jen was, a full-time employee working a very busy job, and ultimately is saying, look, I'm looking for an escape hatch from my day-to-day. And she starts working this side hustle with Pink Houses. And she literally just pulled in north of $35,000, 38, I think was the total. So amazing stuff that's happening with this business model, where basically Pink Houses is taking and correct me if I'm wrong. So Michael founded this company and he's shared about it on a couple dozen videos here on this channel. We'll put those in the description below for you guys. You can always email and ask questions about it. You can email pink@vipfinancialeducation.com. That's pink, like the color, at vipfinancialeducation.com. And basically what you do is you sit with people and try and figure out whether or not they'd be a good fit. If somebody wants to be an entrepreneur, if they're looking for a way to tap into a market that's good, whether the market is like it is today, or when it actually gets worse and it all starts to unravel, we only anticipate your business model actually getting better and better along the way, right?
Yeah, no, that's absolutely the case. And again, like you said, this is not for everyone. This is not a passive strategy. So if people are out there looking to, just make mailbox money, this would not be it unless they want to hire a team, which we've got a lot of folks that are out there doing that right now. And when I say team, I'm talking about 1 or 2 people that are coming in and doing a lot of kind of that groundwork. And then, they're kind of playing that helicopter managerial role. But we have had just tremendous results, even in spite of the housing market right now, where people are still often willing to delay the sale of their home because they can make kind of a longer dollar and they're not paying real estate commissions. All of those things factor into why it's been successful for us still. And we can do traditional deals with this as well. It's all encompassed in our training, which is very thorough, ongoing coaching, ongoing support. And we've got a nice healthy profit margin. This is kind of that high-end wholesale, if you will, where we're only really dealing in higher dollar homes. And of course, those price points are going to be market dependent, market specific. So San Francisco is going to be different than St. Louis. Average profit margin on per deal is around $15,000 without laying a nickel on the table. Now, of course, there's an upfront cost, a startup cost to buy in. Just like if you're buying any business, you're buying a car wash, you're going to have startup expenses with that. Doesn't matter what that is, but the ability for people to do this in that part-time capacity and make 6 figures plus has been exciting to watch. And Jennifer is a great example of that. Literally no real estate experience down in Biloxi, Mississippi, which, all due respect to Biloxi, Mississippi, but that wouldn't be someplace where I would pinpoint and identify as going to be, the best market for real estate. But some of those a little bit more rural markets have ultimately bear the more fruit. And she is just a living testament that, if you can be coachable, you can be trainable, you can follow a very specific blueprint, even in part-time work, you can be really successful. And yeah, I did see the video, and she's contemplating, quitting her W-2 right now and going into this full time because she's been able to see the model prove out. And obviously that's, important for people. We never say, hey, go burn the bridges, day one, this is going to work out. Keep your fingers crossed, get rid of your steady job income, your W-2 income, and come on board with this. But time and time again, people are going through the process and, they get that first deal where they're putting, $15,000, $20,000, $25,000 in the bank, and we call that the hush up money, because everyone's going to have their doubters, right? Everyone's going to have someone say, "Oh my gosh, what are you doing? You have no real estate experience. You've already got a full-time job." So that's always a pretty neat moment, and we always take internal videos and just share them with our other affiliates when that happens. And Jennifer gave us a great one with that, and obviously gave you a nice testimonial as well.
Yeah, for sure. No, it was a great time speaking with her. And so, yeah, a couple quick points that you reminded me of there. Number one, I think it's important to point out that you do have limited markets. This isn't some overlapping unlimited supply. And I know that sounds sort of cliche and sales gimmicky, but you're working based off of a footprint or a geographical region. So each person sort of stakes their claim to that region, which means when it's gone, it's gone. So in order to find out whether or not the region is available, just email pink@vipfinancialeducation.com. Make sure you put your first and last name in there along with VIP conversation in the subject line, and go ahead and put the region or area that you live in inside the body of the email too. Michael and his team will reach out to you. The other thing that you brought up really hit close to home, because you're like, look, there's a startup cost behind this. And I just recently went through the development of a new fresh business for me as well. And it's very similar to this, right? We expect a 6-figure outcome for our first year. I think we're going to hit about 8,000 per month or 2,000 per week. We're now just hitting our 13th completed week as of last Friday. So yesterday starts our 14th week. And we're right on track with a $28,000 total revenues so far. And it's it cost me $50,000, right? Now I split that 8,000 with a business partner. So I came in with the seed money and he's doing a lot of the work, a lot like that helicopter situation you were describing. That's how it worked for me. 50,000 in, and I only get to keep half of the money, but I have somebody doing all the day to day. And now I'm seeing $1,000 per week or $4,300 per month, and I recoup all of my money in a year. That is a no-brainer in my mind, right? And if I were doing all the work too, I would actually not just recoup my money, but I would double what I had put in. And that's very similar to your business model as well. It's a business in a box. It's not inexpensive. I know you guys charge 30 or 35,000 for your cheaper package, and then you have a more expensive business in a box, and then you guys are doing the leads. And there's a whole system behind it, which is why I like it, because it's tried and true. And I don't go into businesses that don't have proof of concept like this now. So I always strongly recommend it. You'll spend a lot more money going out and inventing your own business than 30 or 60,000 bucks. It is much more expensive, much more intensive, a lot more brain damage and psychological tests to be had when you're trying to create something from scratch, right?
Yeah, I mean, we've made all the mistakes over the years, and I say that with a smile, but we have. You know, we're trailblazers in this business. We don't have a competitor. I mean, we don't have a direct competitor. There's mom and pops that will do, something, one or two houses and that they've owned, or they had it as a rental and they'll sell it off on a lease purchase, which is what our model is. But we really have this thing on steroids. The coaching, the training, the support. I'm flying out actually first thing tomorrow morning down to Jacksonville, Florida, which is where our corporate office is down there. And we hold these live trainings once a month, and we're just getting back into that because of the pandemic. But we've got people flying in from all over the country that are going to spend, 2 or 3 days with us, getting to know each other. We do have that family atmosphere, and I think that anyone that, has joined us would attest to that. But we dive all in. I mean, it's A to Z. It's intense training, but when you leave, you have a coach assigned to you. We've got tons of online training, online support, talking to other folks that are just getting started just like them. So we always want those to be open lines of communication. But it's an exciting business, and, it's going to get better even as time goes here, because of the market situation that we all think is going to happen in our camp. Everyone out there does not, but those foreclosures and things like that, and the market dipping is going to be really advantageous to us.
Well, I think it's a tremendous opportunity, continues to remain one. It's not the only opportunity we talk about on this channel. Michael's going to be bringing in a mobile home conversation here shortly. We're talking about what we would consider to be our favorite MLM. We're very, very particular, skeptical. I would say probably even goes as far as cynical. Even though I'm a fan of MLMs, I am a cynic and always go in with the highest level of skepticism, because I just think that they're mostly terrible. And for most people, they're terrible. We're going to be talking about more of the short-term rental market businesses, because that's been phenomenal for me. This is not about having a dog in the race, guys. You're going to find what works best for you. Pink Houses just remains a really, really eligible candidate for most, for a very specific type of person. And it is active, and we talk about what type of person that is in my interview with Jen. So make sure you check out that video. And again, last but not least, email pink@vipfinancialeducation.com if you have any questions, thoughts. Put your name and phone number in the body of the email along with VIP conversation in the subject line, and check out the other videos below. I'll put a playlist down there so you can see more about what this business is. We're not going to have time to get into all the questions today, but I think it all boils down to whether the market does eventually crash this year or next or the year after. Anything you can do now to prepare for that crash leaves you coming out on the other side with a lot more opportunity, and you could then end up being the buyer and on the receiving end of what many people are already predicting is going to be the largest transfer of wealth in history. It's already happening, folks. If you're not paying attention, you got to wake up. You got to open your eyes, because it's happening all the way around us. And I sure as hell am going to be somebody that's going to clean up. And I feel bad for those who aren't ready, but it is coming, and it's coming at some point in the future. So start preparing today. Email Michael. Michael will reach out to them. Mike, thanks for all the insight today on this subject. I know it's a really important one for everybody to be paying attention to. So thank you.
Yeah, always enjoy being on, brother, with you in particular. And yeah, I thought it was a great conversation today. There's a lot of nuggets in there. And as we always say, people need to go out and do their own research. We do a lot of that on their behalf. And obviously we give our own opinions depending on the subject matter. But people need to go out there and be informed themselves. And they're going to come across other things that they're not necessarily seeing on this channel just by going out there and being active about doing research and just really preparing, little side hustles here and there, $200 or $300 extra per month from, some business opportunity that they came across or they ultimately started themselves. That adds up, and that does provide that level of protection. And, if you have multiples of those, or, you do something like a pink where you don't have to do a lot of volume to make pretty significant money, we're always going to encourage that. So yeah, love being on, and talk soon.
Take care, buddy.
Some names and where you're from.
Bobby and Jenny Witten. We're from Knoxville, Tennessee.
What's your previous real estate experience?
So we've got some buy and hold properties. We currently have about 7 units, and we've been in real estate investing for about a year now.
Fantastic. After the last 4 days, what's the biggest takeaway?
The biggest takeaway from us is this is something you don't have to do alone. The staff here is incredible. They're supportive, they're knowledgeable, they're friendly, professional. We don't feel like we're doing this alone. We feel like we've got a team behind us, and that's going to make all the difference.